Yeah, good morning, everyone. So we saw Friday US market ending positively, mainly driven by the positive results which are coming in the US market. So if we see the S&P 500 US, around 40% of the company have reported numbers, and almost around 75-80% of the company have reported numbers which are ahead of expectations. So positive results continuing in this quarter for S&P 500 US, and that is driving the market. Apart from that, we saw some marginal cool off in the other market also, and we saw like dollar index and bond yield has come off a bit. But overall, Asian market has shown are showing good positive trend in the today morning trade. In most of the Asian markets are positive, around 1% plus. Even commodities are also more of a sideway, not giving any great reflections of any up and down. So overall seems positive trend indications from the international market, and we may see uh, positive opening and continue to do trade positive in during the today's trade. Now I'll request technical team to take up from here.
Yes, thank you. So good morning, all of you. This is Swati. Today, the market is likely to open with a gap up opening by almost 70 to 80 points on the higher side. Last week, we have seen that the Nifty somehow manages to maintain a closing about 20 days moving average, which gives some sort of a relief sign. Since we are today getting a gap up opening, we believe that Nifty is likely to face a resistance at around 22,470 to 500 level that will act as a first resistance zone. If it's cleared at level, then 22,600, 640 levels can be seen on the higher side. Whereas on lower end, as of now, 22,340 will act as a crucial support level. Any move below that level will witness some sort of a profit booking, which might drag the Nifty towards 22,270 levels. The overall view will remain a positive as long as Nifty sustains above 22,340 levels on the downsides. Coming towards the Bank Nifty has trading in the pattern of the high tops, high bottom formations, and we believe that it's trading in the upward rising channel, and this pattern is likely to be continued in the near term as well. For the immediate resistance lies at 48,480. Upside, if it's cleared at level, then more levels on a high side, 48,700, 49,000 can be seen, whereas the support is placed at around 48,160, 47,950. Coming towards the Fin Nifty, 21,500, 21,630 are the crucial resistance zone. We need to keep eye on it, whereas the support is placed at around 21,270, 21,180 levels. Coming towards the stock specific, JK Paper really looks good on the technical front. The stock is well placed above all the important moving average, and the volumes and the price are going in hand. So we believe that we are likely to witness some positive momentum towards 400 levels. So one can go for a long positions at CMP by maintaining a stop loss of 376. That's it from my end. I request derivative team to take a point forward.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as I witnessed that in the last week of trading session on the Friday, we
Amit, we can't
Hello.
hear you. Yeah. Hello, Amit, you are not audible.
Till that point of time, we might witness some sort of range on momentum in the market. So current scenario, we might see some supportive buying from Nifty of 22,400 and 300 level, and upside selling will be witnessed at 22,700 and 800 level. While on the PCR front, we are seeing a PCR closed at 0.99. Upside level for the PCR is at 1.7 to 1.0, closed at the supportive base of 11. India VIX has created a base on the downside towards a 10 to 9.5 level. Till the time this level is not getting broken out, till that point of time, we might witness some shoot up in India VIX towards 15 to 16 level in coming days of a trading session. So initial basis, we might see some range one momentum from the range of 22,200 to 20,800 level. While on the stock specific front, a counter that looks in today's session will be Manappuram Finance and CUBCT Union Bank. These two counter have we have seen that the fresh long position has been created, and we have also recommended buy call in these two counters. So keep watch on this buy call for coming days of trading session. So that's it from the other front. Thank you.
Hello, Jian.
Yeah. Good morning. On BSE, there is news that shift from premium to notional value of options contracts is a it will be a regulatory setback, and BSE will have to pay higher regulatory fee as per SEBI. So this will be seen negatively. Prima facie, we feel that FY25 and 26, consensus estimated profits should be impacted by around 20%, which seems to be a big kind of hit on BSE. So expect negative reaction. There were many results in the BFSI pack, and out of that, two results which stood out on Friday and Saturday were Bank of Maharashtra and Utkarsh SFB. Bank of Maharashtra result improved. Advances grew 8% sequentially, 17% year on year. There was slightly higher other income, but also lower credit cost, which supported profit growth of 18% sequentially and 45% year on year. ROA continues to improve every quarter. It now stands at 1.7% against 1.5% in December quarter. We are positive on Bank of Maharashtra. Utkarsh Small Finance Bank result improved on the back of expansion in NIM, higher recovery of return of accounts, and moderation in credit cost. Loan book grew 9% sequentially and 25% year on year. Sequentially, you will find that all SFBs and microfinance companies will post good growth because March is the best quarter for microfinance. NIM came at 9.9%, expanded by 20 basis points sequentially, 40 basis points year on year. Credit cost came at 1.8% against December quarter's 2.8%. And net NPA has now reduced to almost zero, which will be acting like a sentiment booster because this being a very risky segment, whenever company reduces its net NPA to zero, we think that perception will improve for the company. We are positive and feel that in the short term there could be some good move over next couple of months. ICICI Bank result is in line with expectation. Loan growth was subdued and across all segments it was tepid. NIM was offset by lower OPEX and credit cost. So NIM also declined by around 3 basis points. However, OPEX saw decline on sequential basis as well as credit cost, which resulted in around 4% growth in profits on sequential basis. Asset quality was under control with slippages of 1.7% versus 2% in December. We are positive on ICICI Bank. SBI Life Insurance result is in line with expectation. APE grew by 17% year on year. VNB grew by just 5% year on year as margin declined from 30% last year to 28% this year. This was because of increase in share of ULIP from 55% to 60%. We remain positive from long-term perspective. Yes Bank result was flattish sequentially and in line with expectation. If you were to adjust for the one-off higher income tax refunds under other income, advances grew 5% sequentially, 14% year on year. NIM was stable at 2.4%. Asset quality saw improvement with credit cost coming at 90 basis points against 110 basis points in December. And the total net stressed assets, which is a kind of watch list, beyond NPA, that came at 4.6% against 5.7% in December. So that also declined. However, despite good improvements in parameters, the stock remains expensive at 1.9 times price to book. For ROA, which it delivered, was just 0.5%. L&T Finance result is slightly below estimates. Loan book grew 4.6% sequentially and declined 3% year on year. Loan book continued to decline on year basis, mainly because the wholesale book, which is still just 6% of the overall mix, but on YOY basis that came down by 80% and sequentially 20% it declined. Whereas if we look at the retail book, the growth was 31% year on year and 7% sequentially. So soon over next 2-3 quarters, we think that the loan book will become entirely retail, and from that point of time, we will the total loan book will also start reflecting good growth. Asset quality remains stable. We remain positive on L&T Finance. RBL Bank result is marginally above expectation due to moderation in OPEX. Advances grew 5% sequentially, 20% year on year. NIM declined 7 basis points to 5 and was at 5.45%. OPEX grew 2% sequentially, 10% year on year. And because of this, cost to income came at 64% against previous levels of between 67 to 70% range since many quarters. Asset quality remained muted and slippage was stable at 3.2% levels. We remain positive on RBL Bank. SBI Cards, although reported result is above expectation, led by steep decline in OPEX, but the outlook going forward remains weak. NIM came at 10.9%, down 40 basis points quarter on quarter. NIM has continued to decline for 11 quarters in a row consecutively and stands at the lowest level since listing. Credit cost remained elevated at 8.5%. Closer to listing time, when everyone was bullish, the credit cost range was at around between 6 to 7%. But seems that now the steady state credit cost has settled at higher levels. Management expects no near-term turnaround in asset quality or overall profitability. Market share also declined on year as well as quarter on quarter basis. So one can avoid SBI Cards. Thank you.
Good morning. Atul Limited posted result on Friday. Revenue result was below expectations, where revenue grew by 1.4% on a YY basis, and EBITDA margin reported 12.2% versus 12.5% in the same quarter last year. The quarter EPS stood at rupees 19.8, and the company has hosted the call on 2nd of May. So we will provide the outlook post the con call. The stock is trading at a PE of 27 times to FY26 EPS. Thank you.
Good morning. So HCL Tech reported its numbers post-market hours on Friday. The results were in line with expectations. The revenues were flattish for the quarter. So they have given a guidance of revenue growth of 3 to 5% for FY25, which is ahead of what Infosys had guided for 1 to 3%. However, there will be an offshoring impact of one of a large client, which will result in the next quarter, that is the June quarter, to be down 2% Q on Q, the revenues. So that is a little disappointing. So near-term outlook seems negative, but long-term, the stock is trading at a multiple of 22 times for FY25. So long-term outlook remains positive for the stock. Secondly, Mastech too reported its numbers and they were flattish. The revenues came at $94 million, 0.3% marginally down. The margins were down 170, EBIT margins were down 170 bips quarter on quarter. And but they do have a healthy 12-month order book at $260 million, which is 19% growth on a year-on-year basis. So the long-term outlook remains positive. They have a con call today evening, so we can post further view on the stock later. Thank you.
Hi all, good morning. Maruti Suzuki's result is in line with expectations. Maruti Suzuki's sales volume grew by 17% YOY and 13% QOQ. Revenue from operation grew by 15% QOQ and 19% YOY. It's marginally above expectations. EBITDA grew by 40% YOY and 20% QOQ. It's in line with expectations. PAT grew by 48% YOY and 24% QOQ. Additionally, the company had a conference call last Friday. Company continues to work on multi-technology strategy. CNG share of the industry stood at 15% in FY24 versus Maruti Suzuki's penetration at 24%, which grew 50% YOY. And companies aims to sell 600k units of CNG vehicles, expecting growth of 30% in FY25. Average discounts reduced sharply QOQ on 14,500 per vehicle from 23,300 per vehicle. The rural market is growing faster than urban market, with rural outlets increasing. The company is committed to hybrid technology and is awaiting government support for a GST cut and focusing on expanding it to compact cars. According to the company, the export outlook is positive, with an expected growth of 6% for the next year. And the company is pushing rail transport more than road transport for dispatching cars to dealers. So the overall outlook of Maruti Suzuki is positive. Thank you.
Yeah, apart from that, Shakti Pump has reported good numbers. The numbers were continuation of last quarter's strong numbers. Order book also increased from 22,500 to 24,000 crores. In fact, company is benefiting from one of the government scheme of Kusum, wherein solar pump is being installed by the farmers, and central and state governments are giving subsidy to them. So, company has reported strong revenue growth and margin expansions. So, revenue grew by almost around 23% quarter on quarter to 610 crores, and EBITDA has increased to 21%. As compared to 14% last quarter. So outlook for Shakti Pump looks positive. Then day before yesterday, Huhtamaki had a con call, and the company has indicated that there was some exceptional write-off in other expenses of around 12 crores. So adjusting to that, the result has shown stability as compared to last quarter and shown substantial improvement as compared to last year. So that will act as a positive for the company in today's trade. That's all from us. And I'll request technical team, commodity team to take up from here.
Thank you, sir. Very good morning, all of you. For today's sitting session in USD we are expecting some sideways to bullish momentum in USD within a range of 83.35 on the lower end and 83.55 on the higher end. So one can initiate a long positions around 83 83.46 to 83.55 levels with a stop loss of 83.38 for the target of 83.53 and 83.55 level. That's all from us. Thank you.